Okay, Snowflake. Wow. Talk about a blizzard of cash, right? Just seem to be rushing in after these latest numbers. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we are diving deep into Snowflake. That's ticker SNOW. We're using our research based on data pulled just this morning, August 28th, 2025. So before we jump right into Snowflake, let's maybe quickly set the scene. What's the broader market doing? Looks a bit shaky this morning.
Yeah, a little bit of jitters is a good way to put it. Futures are mixed. You've got tech down just a hair, but the Dow is sort of, trying to find some green.
Okay. Any particular reason for the hesitation?
Well, it's kind of interesting. We've got stable growth news coming out of the UK, but here, well, the chatter about a potential US recession seems to be picking up steam again. Plus, today is just a massive data dump day. We've got jobless claims, GDP, inflation numbers, all hitting the wires.
Right.
So yeah, you can expect things to be potentially choppy, very headline-driven. It's definitely a day to keep an eye on the newsfeed.
Got it. Okay, let's talk Snowflake then. Their Q2 earnings, they weren't just good, they were spectacular, wouldn't you say?
Oh, absolutely. They didn't just beat, they smashed expectations. Revenue was $1.14 billion, EPS down 0.38 cents, both way ahead of what Wall Street was looking for.
And they raised guidance too, right?
They did. They bumped up the full year product revenue forecast, now looking at $4.4 billion. That's a pretty hefty number.
So what's driving this? Is it just the general AI buzz or something more specific to them?
It's definitely tied to AI, but it's more about their execution within that space. There's huge demand for their AI-powered data cloud, and they're innovating like crazy. I think our research mentioned something like 250 new capabilities just in the first half of the year.
250. Wow.
Yeah, it's aggressive. And clearly it's working. Analysts love it. 83% have a buy or a strong buy rating right now.
Okay, so here's the part that really jumps out from our research. Phenomenal quarter. Analysts are cheering. The stock's flying. But then our deep dive valuation model, the one looking at those future cash flows, it suggests an intrinsic value way down around, $45 a share?
That's right, around $45.
And the stock closed yesterday over $200. That's a massive gap. How do we even square that? Momentum versus, fundamentals.
Exactly. And that's where you look at other factors like sentiment to see how the market is actually playing this right now. The options market tells a story here.
Okay, what's it saying?
It's leaning pretty bullish. The put to call ratio is down at 0.79.
Meaning more calls than puts being bought. Bets on the price going up.
Significantly more, yeah. It shows strong bullish conviction, at least in the near term. And that $220 strike price, it's become this huge battleground, massive open interest there.
So lots of bets concentrating around $220. Any downside protection visible?
Well, if things were to turn, the $170 level looks like a potential sort of safety net based on the options positioning.
And what about short sellers? Anyone betting heavily against this rise?
They're there, but it's not overwhelming. Short interest is moderate, around 3.2% of the available shares last we checked. So some skepticism, but not a full-blown attack.
All right, let's shift to the technicals, the charts. Our research flagged this as a kind of tale of two timelines. What does that mean?
It means the longer-term chart, maybe looking back over months or a year, still has some, let's say, warning signs flashing. Not outright bearish, but cautious.
But the short term?
The short-term picture has done a complete 180. It's flipped decisively bullish, especially after these earnings.
What are the signals confirming that?
Well, first, just look at the volume. A massive surge of capital pouring into the stock. That's huge confirmation.
Volume's there.
Second, momentum. Those gauges, the indicators we track, they've just crossed firmly into positive territory. The stock isn't just rising, it's accelerating. You remember how volatility was pretty low before the earnings? It was like a coiled spring. The earnings news basically released that tension, potentially fueling a really sharp move higher.
Okay, so putting it all together, fundamentals, amazing short-term, valuation, questionable long-term, sentiment bullish, technicals flipped bullish short-term. What's the verdict for today?
Given all that, especially the immediate catalyst and the technical confirmation,
our final verdict for Snowflake today is a bullish outlook.
Yeah, the logic is pretty clear right now. You've got this incredibly powerful short-term fundamental driver, those earnings. It's backed up by huge buying volume, that decisive momentum shift we just talked about, and the options market clearly positioning for more upside.
So short-term forces are winning out over those longer-term valuation concerns for now.
It seems that way. Sentiment and this catalyst are just too strong to ignore in the immediate picture.
Okay, so for anyone trading this today, what are the key levels from our research?
Right. Immediate support is basically that after hours close, around $226.80. If it breaks below that, the next big level is that $220 strike everyone's watching.
And resistance. Where might it bump its head?
The immediate hurdle is the pre-market high, which was around $230.50. Need to see if it can push through that early on.
Okay, so it really feels like Snowflake's valuation might be, well, up in the clouds somewhere.
Yeah.
But it seems like its earnings and its momentum are right up there with it, at least for now. Which brings up a really interesting point, doesn't it? This tension. Explosive momentum versus maybe stretched fundamentals. How long can that last? And what should you, the listener, watch for if that dynamic starts to crack? Something to think about. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of D-Risk.